Another Bank of Canada rate hike just happened today. It was expected to be between 50 to 75 basis points, and the market actually indicated a 75% chance that a 75 basis point rate hike would happen, and I can't believe it, the 50 basis point camp won. So as of today, our policy rate just went from 3.25% to 3.75%, lower than expectations. I think the more important bit that everyone is looking at today is to see if the central bank has shifted gears and what their updated projections are for GDP and CPI. They did release their monetary policy today as well, which comes out every other meeting. So let's dive into that to see if we can get more insights on where they might be headed. But before I continue, if you enjoy content like this, don't forget to give this video a thumbs up and subscribe to our channel so you see more videos like this made specifically for real estate investors in Toronto. The Bank of Canada first said they would front-load rate hikes in July to bring inflation down, and they did hold on to their word. We saw a 100 basis point rate hike in July, 75 basis points in September, and now we have a 50 basis point rate hike in October. They did say that inflation is still high, and so they will continue to raise rates. But if this trend does continue, we'll hopefully see more normal stepped rate hikes at 25 basis points each, and the next one is scheduled for early December. If you look on the Bank of Canada website, you do see CPI numbers, but that number is the headline CPI, which includes energy and food, and these two are really the most volatile parts of inflation. And what we've been seeing is that the headline CPI has been coming down, but when you break down the numbers, it does come from energy prices dropping. So the first takeaway from the BOC today is that they're going to be focusing more on core CPI, excluding energy and food, which still remains very close to the peak at 5.4% as of September. So we will need to see this number come down before they stop rate hikes. Going through the monetary policy report, I think everything looks a lot more reassuring and we are moving towards the right direction. The jumbo rate hikes do take time to kick in, and what you see right now is that the Bank of Canada actually adjusted their inflation expectations downwards from the previous report, which means things are actually better than expected. The Bank of Canada expects CPI on average for this year to be around 6.9%. Right now, the average is 6.8%, so they actually don't see inflation changing that much for the rest of this year. Next year, in 2023, inflation is expected to come down, averaging 4.1%, and by the end of the year, actually reach 3%, which is the upper range of their inflation target. And then in 2024, rates are going to get back on track to their target at around 2%. As these major rate hikes kick into effect to bring inflation down, we all expect a recession next year, and so does the BOC at this point. They've updated our GDP growth forecast, and for next year, 2023, GDP is only expected to be around 1%, and then in 2024, it would go up modestly to 2%. I think the big thing here is that things are looking more and more predictable. The BOC seems way more confident now, and inflation momentum is slowing, and they've revised their inflation targets downwards. Business inflation expectations as a whole is also stabilizing. In the past reports, inflation expectations kept going up and up, but right now we've remained more or less at the same average spot, and it's actually reaching more of a consensus these days, with the bell curve narrowing, and all of these are positive signs for real estate investors too. The biggest thing that will prop up the investment property market is when the interest rate uncertainty starts to go away, and we're getting there. Once the moving target is stabilized, more and more investors will know how to value properties, and that's going to make investor demand pick up. The other question I sometimes get is if the looming recession will impact rents. It's true that this rent growth that we've been seeing this year is not normal, and it's moving in line with inflation. The outlook is that interest rates might be peaking soon, but they're not coming down anytime soon. So this isn't a repeat of 2020 when rents dropped because rental demand came down and supply came up. We don't see renters rushing in to become homeowners at these high interest rates still, and we don't see a lot of new investors ignoring rent yields and purely speculating on price since lending is still going to be tight at these higher rates. What we do expect is that rent growth will start to slow down in 2023 and eventually grow in line with the target inflation rate of 2% in the long run. And in these situations, the big winner ends up being the real estate investor because you are getting returns from two buckets that are actually inversely related. When the economy isn't doing so good, real estate prices don't really go up that quickly, but you do make up for it from a strong rental market because renters are deferring to buy and end up renting for longer. When the housing market recovers, you end up seeing the opposite. Even though rental demand and income might slow down, you gain in appreciation. So basically, once investors get more clarity on how to price real estate, demand should come back because rental properties do make a well-rounded long-term investment that's strong in various economic situations. If you want to learn more about what today's deals look like, just reach out to our team. We're a real estate sales brokerage that focuses on investing in real estate in Toronto. When you work with us, we take the time to understand your needs, teach you the ropes, show you these deals, and eventually help you buy the best one. But that's not all. Our team also provides renovations guidance, leasing, and property management if you need it. So just connect with us if you want to learn more about our services by heading to the link in the description below. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye.